So this is going to withdraw a huge quantity of gold participants have been relying on, if you like, as a supply to this enormous demand, particularly from Asia, which basically is cleaning everybody out. So, if you look at this, the phases of this leasing thing, I think I come to the conclusion that leasing is coming to an end, and that is withdrawing huge quantities of bullion, physical bullion, from the market, and the consequences will be seen in the paper markets because they will contract on the back of it. I mean, I think these are momentous times. I really do.
Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
The movements in the past going into the back entrance of the Bank of England. In fact, I used to lunch with the head of the Foreign Exchange Department occasionally in the Bank of England. And we used to see these trucks going in. I mean, I think it was really 2 days a week. You get about 5 or 6 trucks going in and out and all the rest of it. And you'd never know what they were actually carrying. But there is a logistical problem. The other thing I would say, Andy, is that I don't really regard the Bank of England vault as a major storage point for commercial entities. It's basically for central banks. So if commercial entities are taking gold out of the vaults, then I'm fairly certain that this is going to be leased gold. Now, this is important because I think if you look at the leasing operation, leasing, swap, whatever, if you look at that, Frank Venerosa wrote about this back in the late 90s, and also he spoke particularly at, I think it was 2002 in Lima, where he concluded that possibly between 10 and 16,000 tons, and that's between a third and a half of all central bank gold, was out on lease at that time. And as he put it, was adorning the necks of Asian women. In other words, it had gone into the market and wasn't going to come back. So there is this problem, I think. Now, I think that following that, basically the way the Bank of England worked it was book entry transfer. In other words, we can arrange for gold to be leased to you as a commercial entity. But it remains in the Bank of England vault because it's got to remain in a vault somewhere. If you're using it, let's say for a collateral or whatever it might be, then there's no need for it to move out of the vault. So this becomes what they call a book entry transfer. So in other words, you instead of having the stuff delivered into the market and disappearing, you had 2 owners, if you like, of the gold in the Bank of England's vault. So, it didn't appear that there was a problem. I think the importance of this development recently is that this gold is now being arbitraged out of the Bank of England vault and into Comex. The other side of the Comex problem, I think, is the stands for deliveries. Now, I don't know who the hell's standing for delivery, but I'm pretty sure it's not swaps, it's not bullion bank trading desks or whatever. I mean, because apart from anything else, you've had this situation which has forced a huge great premium on the futures, which has created this arbitrage in the first place. If it was just a matter of the establishment swapping chairs on the Titanic, you wouldn't get the premiums on Comex. The reason that this stand for delivery, I think, is so important, and nobody seems to be mentioning it, is that if you work out the stands of delivery over the last 4 years, up until the end of last year, it was around about 2,000 tons, 2,100 tons, something like that. That is a huge amount of gold. But since the 1st of January, those stands for deliveries have accelerated at a rate whereby if that's maintained, it would be something like 1,700 to 2,000 tons this year alone. In other words, the pace of stands for deliveries has accelerated very, very sharply. Now, undoubtedly, this might have something to do with, Trump basically, you stand for delivery if you want gold and you don't want dollars. Really what you're doing is you're selling dollars and you're buying gold. But as we know, if you stand for delivery, you don't necessarily get delivery. That is something that sort of you have to keep on badgering to actually get. Now, put yourself in the shoes of, if you like, the establishment, if you like, which is faced with all these liabilities discharged. These because legally they should deliver a stand for delivery. So they can't ignore it, and they have the position. They have the problem that if we get tariffs, then my goodness, we don't have enough gold to match this. So they had to create this enormous flood of gold into Comex warehouses in order to cover their stands for deliveries. And I think that's basically what's happened. But the interesting thing, Andy, is look at the phases. First of all, the one that Veneroso identified, and that is that gold, if you like, was being leased out and then sold into the market, and the proceeds used for a carry trade into US treasuries. That was the situation up until the end of the last millennium. Then you have the big bit where it's sort of hidden because it works on a book entry transfer
system. In today's news recap, gold hits record $3,124 amid trade tensions. Gold continues to defy gravity, clearing the nominal intraday record of $3,124 on the 31st of March as at time of writing. In real terms, though, we are still 11% below the intraday high in today's dollar terms of $3,486. This was a nominal $850 on the 21st of January, 1980. Amidst the second oil crisis, the Afghanistan and Iranian crises, and the failed attempt of the Hunt brothers to corner silver. Gold's driving forces are still geopolitics and the growing economic and trade war uncertainty, all of which, of course, are intertwined, with markets and investors focusing on the so-called Liberation Day on Wednesday, 2nd April. Gold is still overbought and is testing the upper end of its new steeper channel, but for now it has a life of its own as the markets are firmly in risk-off mode. Silver cleared $34 at the start of this week, but was also overbought and subsequently dropped through all the major moving averages to $33.5. The gold-silver ratio continues to widen as the economic problems that are helping to boost gold are working against silver. It all hinges around Tariff Day, what is aid, the underlying intention, and how viable would be the implementation of any proposals. One of the president's aides is arguing for stiff negotiation and then doing a deal, while another senior aide wants any implementation to be within well-structured legal frameworks, which would add several months of lead time. The United States, Mexico, and Canada agreement had thousands of products that were exempt and just unraveling that would, in our view, be a logistical nightmare. Asian gold demand has tailed off, North American coin and Barra Re still sclerotic.
Now we have this situation where we've gone back to this stuff disappearing into the market. This is interesting. Now, if you're a central bank, you think, do I really want to lease my gold under these circumstances? It's now going out of the control of the Bank of England. The Bank of England told me before, it stays in the vault, don't worry, and at the end of the lease you get it back. That is now no longer happening, or there's a risk that it's not happening. I don't think I want to lease my gold anymore. You're going to see central banks saying, no, we don't want to lease our gold anymore. And I think the effect on the price actually could be really quite dramatic. And
how much of that gold is still out there that needs to be paid back? Give us back our gold that we leased you. Is that still something that's happening right now? Could that be what a good portion of this gold is? Could it be the gold that we've leased out that we are now reshoring? Could that be a possibility as well?
Well, yeah. I mean, you've got the unanswered questions of where did all the gold go out into the market? And this is not recorded because under IMF accounting, if you lease gold, you can still account that you own it, but you don't. You don't own it if you've leased it. When it comes back under the terms of the lease, then you own it again. But I mean, this is the point about Venerosa's work, which was very, very thorough, actually. And he was talking to Terry Smeaton, the guy I used to have lunch with occasionally. I mean, I'm going back into the 80s now. Smeaton was a very bright guy. I mean, he knew his onions, certainly. And as head of the foreign exchange department in the Bank of England, he was responsible for gold dealing as well. That gold is out. Effectively, it's gone. And I think when we saw the Bundesbank trying to reclaim only 300 tons, now, I'm sure that the Bundesbank wanted more than that, and they were told, no way. So what happened? Where's it gone? It's been leased. It's gone. It's gone. It's not there. And so this is why it took, the New York Fed had to turn around and say, well, we will deliver it to you, but we're going to need 7 years. That was just amazing. 300 tons. They're going to say it'll take us 7 years to get it back to you. In the event, they got it back a lot more quickly. But I think I'm right in saying that the bar numbers that the Bundesbank got didn't correlate with their original list. So, it wasn't there. The gold is in deliverable form. And there have been enough stories around about the gold in Fort Knox, because we're now talking US Treasury reserves. We're not talking about earmarked gold for foreign central banks, which is the New York Fed stuff. I just sort of think that there are a few hurdles which have got to go through before that can possibly work. And quite frankly, if you're going to go down that route, then I suppose you revalue the gold. I don't know. How do you revalue it? It sort of raises just too many questions. And I think the approach of the bureaucracy in the Treasury is, look, just don't stir it. Just keep quiet. Don't bring this subject up. This is just too much bloody trouble. Just stay off it. So I think from every point of view, I mean, I'll see it when,